Hello everyone and welcome to another edition of the Forex Technical Market for August 26, 2015. Okay, in front of us we have a chart of the euro and we see that the euro is pulling back. The dollar is strengthening against the euro. And what we could be doing is testing this breakout point in the euro. I mean, sometimes when we have breakouts, we have the market just continue upwards, and sometimes we have the market come back down, test the breakdown point, then continue upwards. And naturally, the third scenario is that the market will just continue back down, and that's what you call a false breakout. So essentially, we're waiting to see exactly what will happen in the euro and how this breakout scenario will play out. Will it be a true breakout, a false breakout? We'll have to wait and see. But this area, this old trend line, it will act or should act as some support if the market is going to head back up to the north side. And one of the reasons the market didn't accelerate immediately is that, taking a look at the US dollar index, we saw that we had critical support in this 93 region. It's 93 region, and the market, even at this point, the market did not break below this 93 region on the US dollar index, as you can see. So what we see is that the dollar bulls came in and bought this area of support, and I think that's one of the reasons why the market is pulling back against the euro. Now, taking a look at the breakout that occurred in the dollar, we see that the market is testing the underside of this triangle. So it's a similar situation with the euro. The market may test this area and then head back to the downside, attempting to clear this area of support again, or we may see a continued rally in the market. We just have to wait and see. But technically, that is what is happening here in the US dollar. Taking a look at the British pound, we see that the market has pulled back somewhat. And just to note that if you're on the long side of this market, this is definitely a natural occurrence. Not all the time. And it's very important for investors and traders to recognize how the market moves. The market does not always just move in a straight line or straight down. You will get moves up. The market will meander at times, move up and go up. So that's how the markets sometimes move. So if you are saying, okay, which direction the British pound could be going, this could be a top in the British pound, and we could see a further losses. But what this could be is also that the market is just pulling back and could head back up to the north side, because we're up on some support points now. We have the weekly pivot point, S1 pivot point here, and we also have a trend line support hanging around this point. So we could see some support come in for the British pound at these levels. Now, as with trading, anything is possible, and you could see even a larger pullback, and you could see the market take out these low points. And that, if that happens, that will be fairly bearish for the British pound, and we could see a return into the 150 region. If not, we could see a rally up to test these old highs here, the old high here of 159. It's important to remember as a trader to not get married to a scenario. I mean, anything can happen in this market, and that's why you use stop losses when you are trading, because you could analyze a market perfectly. You could have a high probability trade, but the market could just not move in your expected direction. Were you wrong? Not necessarily. You're only wrong, and you did something wrong if you employed poor risk management, and you have lost 10, 15, 20, 30, even 50% on just one particular trade. That indicates to me that you are trading at too high a level. When I must say that when you are managing a portfolio or when you are investing your trading account, you will see the market, you will see your portfolio dip down, it will go up, it will dip down, it will go up, it will dip down, it will go up. Ask any portfolio manager, any successful trader. That's how their portfolio is. You don't, let's say you have a $5,000 account, a small account of 5,000. You won't just see it go to 6, then to 7, then to 8, then to 9, then to 10, then to 11, 12, straight up like that. It may dip down to 4,800, 4,700, then up to 5,300, down to 5,200, up to 5,700. Then it may dip to 5,600, up to 5,800. And so on and so forth. So that's just to give you an idea of how a real life portfolio performs, and not a fantasy portfolio. That's how a real life portfolio trading real markets will perform. Okay, taking a look at the Japanese yen, we have some stability returning to the stock market, where the futures this morning, well, as of this morning, the futures are up. And we have some stability in the USD Japanese yen as a result of the stability in the stock market. The Japanese yen, if you take a look, it's still in a broader uptrend, and for this uptrend to be broken significantly, I would like to see the market close below these swing lows near the 115 level. We're still above that level in the Japanese yen. Okay, we do have some exciting times in the markets. We're keeping an eye on this breakout scenario with the euro to see if the market, the bulls will step in and bid this market up. If you would like to have our trading signals sent to your trading account automatically, you can click on the link below this video to get started with the trading signals. The trading signals is a play that a lot of folks ask about. The trading signals, it's a play that is not designed for you to just really be in for 1 month or 2 weeks and then you're just out. It's not that type of play. If it's something that is designed for you to see gain 6 months, 7, 8 months, 9 months, 10 months down the road. It's a long-term play. Now, naturally, you can get out whenever you want, but folks who see results with it are folks who recognize that this is not something to just get in and get out within 2 weeks. That's definitely not how it works. So if you'd like some more information about the signals, you can click on the link below this video to get started. Thank you very much for listening, and I'll see you again tomorrow.